it was in 2018 when we kind of broke out as a distressed debt company and really had, started making some money. We had, a few good years along the way, but people were like, wow, you guys just kind of came on the scene. I'm like, okay, we've been at this 8 years. So we were like an 8 year overnight
Overnight.
success story.
Welcome to the Real Freedom Show, where we inspire you to pursue your passion to gain time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. Let's get some real freedom together. Hello, everybody. Welcome to another episode of Real Freedom, Real Estate Leverage Freedom, where we talk about different ways that people build time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. If you want to get started on your real estate investing journey, check out our website, freedomthroughrealestate.com. We put all of our interviews, articles, guides just to be able to help you guys make some great decisions and take action and move forward in your real estate investing journey. And today we've got an amazing guest here. Super excited. We've got Tom Dunkel, battle-tested entrepreneur, 30 years experience, built 2 8-figure companies, had some non-successful ones, which we'll also touch on, and raised over $50 million in capital. You're managing director of Eagle Capital Investments and span multifamily, mobile home parks, self-storage, private lending, offices, you name it, you've done it. So excited to hear from you. Also, I should mention best-selling author of the book Wealth Builders Playbook. So Tom, excited to sit at your feet and learn from you today and hear more about your story. So thanks so much for being on.
Yeah. Awesome, Mike. Hey, it's great to be with you and all the listeners. And I love what you're doing for everybody. I think providing this kind of education is super great. So good on you, man. Good on you.
Take us back to the beginning a little bit. I love to hear from
Sure.
people kind of how did you get in it? Why did you get into it? And we'll go from there.
Yeah, got out of business school and went into mergers and acquisitions in the aerospace industry. So started out like doing deals. These were bigger deals. We were buying companies for 10, 50. I think our biggest deal was 120 million acquisition. But I was surrounded by some amazing people, and so really got a real solid foundation for doing deals, putting the projections together. That was my role as a financial analyst. I was putting the projections together, putting the models together, and so we could take that information to the banks and to the private equity firms so we could raise the capital to get the deal done. So I learned those skills very early on in my career, and then kind of went from there and bounced around to a couple other companies that were growing through acquisition, kind of doing the same thing until 2006 when I got fired from my corporate job, my corporate finance job at a publicly traded company that probably everyone's heard of. And so that was kind of the decision point for me. It's like, okay, I've been in corporate America now for, I think it was like 11 years at the time. And I've had some successes. I've had some great experiences, had some not so great experiences, but I'd always wanted to do something on my own. And so at that point, it was decision time, right? So I have a wife and a 4-year-old and a 2-year-old at home. I was on a pretty good trajectory, with the salary and the stock options and the bonuses and all that, good golden handcuff stuff. But I had this desire to want to go do something on my own. So one day I'm at an interview with a company because I was still looking at maybe staying in the corporate world, but I was also looking at some entrepreneurial things. And I'm at this interview with this amazing company, super nice guy, and I literally heard this little voice in the back of my head, like, "Don't do it, man. Don't do it. This is your opportunity to go and do something entrepreneurial." And so I said thank you to the guy, and he really wanted to hire me for this amazing job, and I was just like, I can't do it. And so I went into real estate. I was started out doing wholesaling and fixing and flipping, and picked up some rental properties along the way. And then, of course, that was 2006, Mike, when I started that. So the next
Mhm.
few years, 2007, 2008, things started getting very challenging. So, even though I had this great background, putting deals together, the great education, all that cool stuff, here I was trying to, get my entrepreneurial legs under me, build a team, be the leader, learn something new because up to that point, the only house I had ever bought was the one that I lived in. It was definitely challenging times as the market started to crash and everything. So learned some hard, expensive lessons those first few years, but I was determined to stick it out. So it was around about that time that I started learning about distressed mortgage debt and connected with my partner, Joe Downs. We've been business partners now going on 16 years. And just really saw something in the distressed mortgage debt business that I thought was interesting, given my background in finance and my interest in real estate. So we gave that a run, and glad to report, it's still a growing business today. We've done
Mhm.
probably about $70 million of revenue in that business over the past 16 years, give or take. And that success has allowed us to try some other things. So we were partners in a title company that didn't work out. We tried hard money lending. That didn't work out. And then we tried it again later and failed at it again. And but around 2018, 17, 18, somewhere in there, we started learning about self-storage and thought it would be a really good balance for the distressed mortgage debt business because it was a lot steadier. The distressed mortgage debt business is great, but it's kind of up and down and a little unpredictable. Storage, we were like, okay, this is checking a lot of boxes in terms of predictability, cash flow, tax advantages, real estate, all that good stuff, growth potential. And so we built a company called Belrose Storage Group, and we bought about $55 million worth of storage from like 2019 through today. So that's kind of what I've been up to, and about as we started building the storage company, I let my partners know like, hey, I'll be the chief investment officer. I'll raise the capital, but in a few years, once we get things up and running, I'm gonna want to peel off because I'm the old guy on our team, and so I'm looking to work a little less, play a little more golf, spend a little more time at the beach, spend a little more time with my family, that sort of thing. So we did made that transition in 2024, and so for the last year or so, I've been building Eagle Capital Investments, which is my fund of funds business, where basically I'm inviting my investor partners that I've worked with over the years to tag along with me and take advantage of my experience, my financial analysis skills, and my network of operators to help them put money to work in alternative investment. That's the story of the last 30 years or so.
No, that's great. It's, you see similar themes and some of the stuff that I talk about on the podcast from people is,
Yeah.
it's important to start, right? You don't know where the finish line is going to go. You don't know where the fork in the road or the winding path's going to go, but you got to start somewhere and get some experience to find out what you like, what you don't like, and then what works
That's right.
well, what the market bears, because there are changes in the market outside of your control and you might have to adapt and adjust. Well, you take your
Mhm.
knowledge and experience and problem solving skills and twist and turn with where the market goes and make some different
Mhm.
decisions. And so your story certainly follows that, right? And had you not gotten
Mhm.
into it and stayed at corporate America, well, that's where you would be. And it may have worked out well, may not have worked out well, but at least you're
Yeah.
more in control of your future now, and you've built up some good relationships. You've built up some relationships with investors that now you can decide, what are great opportunities to place capital in.
And you touched on something really good there, Mike, which is that, at the time when I did make the decision to go the entrepreneurial route, it was very scary, but it also felt very natural to me. So I guess everyone's wired differently. I'm sure some people might just revert back to corporate and just kind of ride that out. But for whatever reason, I guess I'm wired a little different and decided to go the entrepreneurial route. And it's been anything but a straight line. I mean, certainly been ups and downs and big challenges and close calls, but also some great successes. And so, wouldn't change it for the world.
Well, the common theme between us is we both picked great times to go off on our own. Because for you, it was 2006, 2007. My first
Yeah.
day officially on my own was the first day of COVID shutdown. So in
Oh,
2020. So hey, when you make
yeah.
that entrepreneurial journey, you've got to you've got that pit in your gut and you've got to figure out a way
Hmm.
to make it work. And so it's difficult, right? There's a lot of
Yeah.
good stuff that happens, but you have to make a lot of challenging and stressful decisions. And
Yeah.
it's not easy, but at least you're more in control of your own destiny.
Because for so many years I was just at the whim of the corporate, beings, like the bosses and the budgets and all of that. And at that point when I left corporate America, it was the third time in 4 years that I had been either laid off or displaced one way or another. And I was like, okay, I've had enough of this.
So talk a little bit about getting into some of these different asset classes. So you've got some
Mhm.
experience in a few different areas, some good, some bad. But for people that are sitting there trying to
Mhm.
decide, kind of like how do I get started or maybe what asset class do I choose? What are
Yeah.
maybe some tips or some thoughts that you have on how would pursue things based on what you've done?
Yeah, great question. And this is something I've actually done a big presentation on stage about before, so I'll try to condense it down. But really, Mike, in my mind, it boils down to three things. One is surrounding yourself with the right people. So, like when I was leaving the corporate world and going into entrepreneurial world, I was going to like as many meetup groups as I could get to. I'm here in the Philadelphia area, so there were a bunch of different real estate investor meetup groups going on. So probably, at least 2, 3 nights a week, I feel like I was out, going to one of those events, talking to people, learning, what are they working on? What are they having success with? What's not working? Those kinds of things. And then, doing the breakfasts and the lunches and just trying to get as much knowledge as I could and find the people who we could really form a relationship and share some information and so I thought finding those people was super important. The other thing is finding a niche, right? So like I mentioned, we failed in the hard money lending business twice because in looking at it and 2020 hindsight, the Philadelphia market for rehabs and stuff is super competitive, right? So we were
Mhm.
going into this market, without, we didn't have like a huge marketing engine behind us. We figured we could kind of lean on our network to, you know, go meet with the contractors, and make loans to them. But man, it's like that's what everybody was doing. And some people had, big corporate backing and they were doing the marketing and all that stuff. So it was very bloody. I guess I haven't read the book, but I guess there's a book out there about red oceans versus blue oceans.
Blue
So it
Ocean.
was like
Hmm.
all this red ocean, very competitive, blood in the water kind of stuff. And so we just got crushed and we weren't able to really grow that business the way that we had hoped. But compare that to distressed mortgage debt, and specifically we focus on residential second lien. So it gets very nichey, and which keeps a lot of the competition away because, oh, why would you buy a distressed second mortgage? Aren't you behind the first, and aren't you going to get wiped out and all this and blah blah blah. Well, and all that's true, but we have a saying at our company, which is, there's no such thing as bad loans. There's just bad prices, right? So we're buying these loans at such discounts that if we do get wiped, yeah, we're going to lose some money, but we're also going to have huge upside on the others. So that throw out our big SAT word for the day, that asymmetric kind of curve is what we're looking for in any kind of investing, right? Asymmetric meaning there's a minimized kind of downside, but a big upside. So that's what we found in the niche of distressed mortgage debt. And then also in storage, self-storage, it's become more popular, but it's still kind of a niche asset class. So we like that as well. And then the third thing is you got to get smart. You got to go deep. You got to find the resources. You got to read the books. You have to become like the smartest person in the country in whatever that niche is that you're trying to go into. And a funny story, when Joe and I were starting our distressed mortgage debt business, like I said, we were going around talking to different people, and we met with this guy who kind of proclaimed himself to be, one of the top real estate attorneys in all of Philadelphia. And we met this guy, and man, he thought we were the dumbest guys ever, and he was really talking down our idea of buying these pools of second mortgages, and because he knew this and he knew that and blah blah blah. But unless you have that specific knowledge for that specific asset class, you're going to you might not make the best decisions.
Yeah, and I think it's good for people to know too that this stuff takes time, right? Your first year
Yeah.
working on that company or your first year doing self-storage, right? It
Hmm.
takes time. And so you
Yeah.
may come from a corporate background or somewhere else where you've had 5 or 10 years to know and understand things and get comfortable and make informed decisions. And then you come into real estate
Hmm.
and you're choosing something that you haven't done before, you're still learning about, and it takes time. So you have to give yourself grace. And in a lot of ways, right, it's just keeping one foot forward instead of quitting. Because if you quit, then you fail, right? If you don't quit,
That's
you're
right.
never going to fail for a
Correct.
big fail because you're just applying those lessons and taking one step forward. And eventually you'll put the pieces
That's right.
together and it'll come together for you.
100%. I remember it was in 2018 when we kind of broke out as a distressed debt company and really had, started making some money. We had, a few good years along the way, but people were like, wow, you guys just kind of came on the scene. I'm like, okay, we've been at this 8 years. So we were like an 8 year overnight
Overnight.
success story. It's like, no, 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 you guys didn't see the late night conference calls after putting the kids to bed and the scraping together the bucks to buy a few loans here and there. So yeah, it's definitely takes some time. That's a good point.
Yeah. And that's the part that people don't see, and it's
Hmm.
the struggle because like you said, it's you've put in the work, you've done those repetitions to get to that curve that you've talked about.
Hmm.
But yeah, nobody's going to see that and realize how tough it is. Maybe you have the decisions to throw in the towel. Am I doing the right thing or should I go back to doing something else? And it's like, no, you stick with it.
Hmm.
But then when the success happens, yeah, then you're an overnight success story.
That's right. That's right. One other thing I think is important to add on to this part of the discussion is when you do go for that niche and you become the smartest person in that niche, at first it's kind of scary to say no to deals, right? So, say no to that one, say no to that one. You're like, oh man, but how am I going to make money, right? Because if you're an operator, right, you're probably making acquisition fees or whatever. And so, but you need to have that discipline to say no to the deals that don't fit in your niche. But what ends up happening is when you do find that deal and you go out to raise the capital from the investors, you're going to blow the investors away with your level of knowledge within that niche. So it's going to make your life a lot easier on the capital raising end of things and the operational end of things because you're going to know that asset class so well. And so when you go
Mhm.
to meet with those investors, you do your webinar or whatever, that's going to come through that you really know that space and you're the guy to invest with.
So picking an asset class, you'd mentioned, self-storage. I like to highlight with people that spot where it's like you're on the sidelines and then you make that jump to get into the game. Think back, like for you, kind of finding that first deal you decided to move forward with, or maybe, do kind of a little bit more on your own versus partnering with others. Talk about just kind of that
Yeah.
spot where you're like, okay, I've got to trust all the work that I've put in, and we're going to now move forward and do this thing versus analyzing 10 more deals and decide if it's the right one.
Yeah, yeah, yeah. It's such a great question, and it's such a big difference between our distressed debt business and the self-storage business. Because when we started out the distressed debt business, like Joe and I scraped together $12,000 to buy 6 loans. That was like our first deal, right? And so we just kind of able to, take that leap of faith, just the two of us, kind of learning, kind of as we were going. And we used to call it, putting the airplane together while it's in the air kind of thing. But then
Hmm.
by the time we got into the, fast forward, 14, 15 years, we get into the self-storage business. Um, we were able to approach that differently because we had the luxury of time. We had the luxury of having capital coming in from other business to be able to take a more disciplined approach. So what we did is we really started educating ourselves, like I mentioned, in like 2017, 2018. We were going to all the conferences, we were reading the books, listening to the podcast, doing all that, talking to the brokers, talking to the financing sources. And then we joined a mastermind group. So we could get, really be shoulder to shoulder with operators who were doing what we wanted to be doing. And so we did all that before we even bought our first facility. And what was important was through that process, we realized like, hey, Joe's good at this and that. and I'm good at this and that, but we had some gaps in what we were missing some key skills. And so through that process and through that networking and belonging to that mastermind group, we were able to bring on a third person, Tim Kane. He had experience that complemented my experience and Joe's experience. So that, rounding out the team, having that education, then allowed us to go and acquire our first facility in 2019 after. And, we definitely went through that phase. I think a lot of people do where you're analyzing deals and you make these low ball offers and you're like, please don't take it. Please don't take it. But you want to make offers because you want to get in the game. And so it wasn't until we had that confidence in 2019 that we were able to have like a legit discussion with the broker, put together a legit plan and make a legit offer. And we were able to take down that facility and do what we said we were going to do. We turned around the operations and made a nice profit on that one.
No, I remember that too. Our first apartment building, it was like, we had come to an agreement and we found it through a wholesaler. And I was like, wow, this one really makes sense compared to everything else I've seen. And so I talked to somebody and she's like, well, Mike, now you get it under contract and then go find the money. And I was like, what? How does that work? Because I was so used to in residential real estate
Sure.
as an agent, you've got to have everything ready and polished. So when you make your
Right.
offer, you put yourself in the driver's seat or the best offer out there. And now it's
Yeah.
like, wait, we get it under contract, then we figure everything out. Like it was a tough brain shift to be able to figure out how to do that. But now you realize
Sure.
that's how it's done. So
It is, and when we were ramping up Belrose Storage Group, we had some pretty lofty goals to scale that. We actually organized the company so that Joe was he was our acquisitions guy. So he's working with the brokers, he's finding the deals, he's kind of doing the initial underwriting. All I did all day, every day, whether we had a deal or we didn't, was raise capital. So I was always, doing the webinars, talking to the investors, so that when a deal did come along, we had already had those talks with investors. So we said, "Hey, remember how we told you we were going and looking for these types of deals in this niche and how smart we are in that niche and our strategy? Well, guess what? We found a property that fits
mhm.
what we're looking to do, and we can execute our strategy on that you already have learned about from our prior discussion, so that it makes it easy for that investor to say, okay, cool, you're doing what you said you were going to do. Here's 100 grand."
So fast forward to today, you've got
Mhm.
Eagle Capital Investments. Talk a little bit about what you're doing now and how you're looking to find great properties to pair with your investors, or great
Yeah,
opportunities, I should say, not necessarily properties, but yeah.
sure, sure. Yeah. So, throughout my journey, and it's been 20 years since I got booted from corporate America. So along the way, I've been involved in, different investor, meetup groups and masterminds and this and that. Some are local, some are national. And so I've gotten to know a lot of amazing operators that are in these different asset classes, multifamily, mobile home parks, medical offices, and et cetera. And of course, self-storage. So, um, Eagle Capital Investments is basically me looking to place my own capital. And then when I find an opportunity with one of these operators who I've come to know, like, and trust, because I've met them, I've probably broken bread with them, may have even had a bourbon or two with them, and gotten to know them and their team and their approach and their track record and all those things. Now it's when I'm looking to place capital and they have a deal, we already have that relationship set up. I already know that they're good people. They're going to do what they say they're going to do, and that is such a huge hurdle to get over. And I find too many investors make the mistake of not really getting to know the sponsor that well, and they go right to the deal. They're like, "Oh, I want to invest in an apartment," so they start looking at an apartment deal. It's like, well, okay,
Hmm.
well, you got to back up. Start
Hmm.
talking to the sponsor first. In fact, we've actually made it into a whole methodology over the years, and we call it the SAFE investing method, SAFE. And
Hmm.
so S stands for sponsor. Like you have to ask the sponsor a ton of questions. If you're getting ready to hand over 50 or 100 grand to that person, that gives you the right, it gives you the permission to ask hard questions. Have you ever had a foreclosure? Have you ever had a bankruptcy? Let's do a background check. Tell me about your, successes. Tell me about your failures. Tell me about your team, all those kinds of things. And then A is for asset. That's when you start getting into, okay, It's a multifamily property in Phoenix. Okay, cool. Well, how old is it? How many units? What's occupancy like? What's the market like? What's happening in that market? Are there companies coming in and investing in that area, or is it kind of a, one factory town where, that factory goes out of business and the whole town goes out of business, right? So you want to ask all those questions about the asset. F is for financials. You go through the financial projections. Are they realistic? Has the sponsor delivered on these kinds of projections in the past? What are the tax implications? Those kinds of questions. And then E is for exit. How do you get out of this thing, right? It's not like you can go to schwab.com and click, click, click and sell your position in a Belrose storage group deal. It just doesn't work that way. So as an investor, you need to understand that your capital is going to be tied up for a period of time, and you need to understand what needs to happen for you to get your money back. Are they selling the property? Are they refinancing the property? And you need to understand like how all of that works exactly, and then how you get repaid and get your return. So
Mhm.
I've built all that framework over the 20 years. And so basically my investor network is able to kind of piggyback on that experience of knowing how to do the due diligence and find the right operators to do business with, and that way they can jump in alongside me. I'm putting my money where my mouth is, and I think that's a,
Mhm.
a great win-win situation.
Are you looking to get started or scale in real estate investing but don't know your next step? Are you overwhelmed thinking about finding deals, analyzing deals, doing due diligence, and managing properties on top of it? Go ahead and push the easy button and invest with us. Real estate investing is what we do full time. We've done dozens of deals with hundreds of doors. We have the knowledge and experience to handpick the best deals that most investors can't find. We vet large off-market deals all the time where you can hopefully find returns and economies of scale that you just can't find on your own. The best thing is it's 100% passive to you for less capital than you put down trying to acquire a property on your own. Don't let this year go by where you don't make the leap, add to your portfolio, or you just sit in analysis by paralysis. To find out more, visit freedomthroughrealestate.com and click on invest. You can book a call and learn more there. So get to scaling your portfolio now with us by your side. That's freedomthroughrealestate.com and click on invest. How does that work? Like, I'm curious to hear from somebody, let's say, and I don't know if this is even true or not for you, but like somebody local that you
Mhm.
built a local, personal connection with. Maybe they
Mhm.
invested in one of your self-storage deals that you were kind of more in charge of. And then all of a
Mhm.
sudden you flip over to a different asset class, and that asset is in Arizona or something like that,
Mhm.
completely different. For that investor, they know you for you because you're local and you did something that you were heavily
Yeah.
involved in. Now
Yeah.
you have that relationship with the sponsor, but it's an asset class in a state that's nowhere near you. Would love to
Mhm.
kind of hear like kind of how do you talk through that with somebody? And I'm sure the answer comes down to it's you and the trust you've built, but curious to
Sure.
kind of hear like how you talk through that with somebody who maybe it is their first time in a new asset class they're not familiar with in a state they're not
Mhm.
familiar with.
Yeah, definitely. I mean, it is something that I had to work through because for 5 years I was the storage guy, right? I was doing podcasts, I was going to conferences, I was on stage, I was the guy known, as the chief investment officer of Belrose Storage Group. So it was storage, storage,
Hmm.
storage. So yeah, so there's definitely a bit of a transition to talking to people about different asset classes. There was like the geographic part wasn't really much of a hurdle because our self-storage facilities range from New York State down to Florida. And we
Hmm.
even did one out in White Bear Lake, Minnesota. So uh,
That's suburb next door to me. So
right down the street. Okay.
yeah.
So yeah, we have an RV storage facility there. So that geographic part wasn't so tough, but yeah, it was definitely different talking to people about, multifamily versus self-storage or mobile homes or et cetera. So it's just a matter of you hit the nail on the head with the whole trust thing, right? The whole reason we're having the conversation is because they trust me from our past interactions. And
Hmm.
so and so that's why I think it's important what I said earlier about I invest in every deal personally with Eagle Capital Investments. So that helps those investors kind of get over that hump as well. And a lot of people have opted out, have opted to not because it's early in the history of Eagle.
Hmm.
And so as I continue to build my track record in these different asset classes, I'm sure I'll have more people come on board. But it is a little bit of a restart, and some people who have fallen off. But they'll probably come back at some point after I show a little
Hmm.
success here or there. Because that speaks the biggest, loudest voice is what's your track record? Right?
Yep.
So the trust gets me in the door to have the conversation, but it's the track record that helps to kind of seal that deal. So stay
Yep.
tuned. It'll be a little bit of a learning period, but I certainly have investors who have said, "Hey, you know what? You haven't done me wrong in the past, so I'm willing to
Hmm.
take a step forward on this one, especially because you're putting up your own money, and we'll go forward from there." So, but some people have dropped off, some people have stuck around. It's just the way the world
Yeah.
works, I guess.
And you can't fault people for making that decision because it is a lot of money. It is
Mhm.
something that they're not familiar with. And for me, I look
Mhm.
at it as if they're like, hey, not this one, but keep me informed of the next deal.
Yeah,
Great. I'm perfectly fine with that. That's your out. That's my,
yeah,
hey, you don't want to, I still keep you on the list in the future. And then it
yeah.
probably just means prove it a little bit more, right? Build that track record. I
That's
talk
right.
about our deals are, still resume builders in a lot of ways because we still
Hmm.
are building that track record. It goes back to when you try to get hired for your first job and they say you don't have experience and you say, well, how do I
Hmm.
get experience? By getting the job, right? It's that catch 22. And that's where
Yeah,
you're at with investing sometimes too, is you've got to find a way to prove it
yeah,
and work with the people that are trust you enough as you're proving it
yeah,
to then get to the people that want to see that backwards view of show me all
yeah.
your successful deals, then I'll invest with you.
Yeah, 100%. Yeah, I like what you said there about resume builders. But it comes down to sort of, I guess, marketing if you want to, or messaging, I guess if you want to put it that way. So, like what I like to do is I'll put out like something on LinkedIn, or I'll send an email to my list or something about, hey, this is a deal I looked at that I turned down.
Hmm.
Right?
Yeah.
I thought it looked good at the surface, but when I looked into ABC XYZ, I decided it was a deal I was going to pass on. And so, because investors like to hear that too, they like to hear that I'm not just throwing money at every single opportunity out there. So there's that. And then as back to the track record thing, right? So all the operators that I'm working with, they have track records that I can piggyback on. And a lot of times what
Hmm.
we'll do is we'll do like a joint webinar, right? So I'll be on, with my buddy Bryce, and he will, I'll kind of introduce him and why I like the deal, why I like Bryce, why I like his team. And then he'll kind of take it from there, and we'll do that kind of webinar where, it's me showing my relationship with him and relying on him and his experience. And so hopefully that, resonates across. But
Hmm.
sometimes it does, sometimes it doesn't. But like you said, resume building.
Tom, thank you so much for coming on and sharing. We covered a lot of great
Sure.
stuff. For people that want to reach out to you, learn more about you, and pick up your book as well, how can they do so?
Mike, this has been great, buddy. Appreciate it. And I love the Eagles' fifth Super Bowl victory towel behind you. I think I mentioned that to you. But yeah, I'm Tom Dunkel. I'm managing principal at Eagle Capital Investments. And if you go to investwitheagle.com, you can pick up a copy of my book here, The Wealth Builders Playbook. And in there, there's just it's kind of stories. I put it sort of in story form about different deals that I've done, different asset classes that I'm looking at, and it goes into depth on the SAFE method that I talked about earlier about how I approach due diligence on these kinds of opportunities, and it's kind of fun. I'm a golfer. And so a lot of the stories, it's like, guys are out on the golf course talking about, investing in multifamily or something. So I had some
Hmm.
fun with it. What are you going to do? And
Yeah.
so anyway, if you go to investwitheagle.com, you can grab that.
Awesome. Well, thank you so much, Tom. Excited to hear about your journey. And thank you so much for opening up and sharing. And excited to see where you continue to grow.
Thanks, Mike. Appreciate it, buddy.